We're gonna go over some cool things today. Sector rankings and ETFs. And then I'm gonna show you guys a website that I use to look at stuff, different things. But first of all, one second. All right, so what are sectors? Okay. The general economy and stock market, they're organized into tiers. So the highest tier, a sector, it's basically a broad grouping of companies that have similar economic characteristics. There are currently 11 major sectors that most investors use when breaking down the corporations and other issuers of securities, such as stocks and bonds. Okay, sectors in turn are broken down into subcategories known as industries. So there's a lot of different types of industries in the stock market, right? So this allows a closer grouping of similar businesses. For example, both Dollar Tree, the discount retail chain, and Tiffany and Company, the luxury jeweler, they're both included in the consumer discretionary sector, right? However, they are sorted into different industries. So they can be in the same sector, but they're in different industries because they sell different products. ETFs, an exchange traded fund, is a type of security that involves a collection of securities, such as stocks, that often tracks an underlying index, although they can invest in any number of industry sectors or use various strategies. ETFs are in many ways similar to mutual funds. However, they are listed on exchanges, and ETF shares trade throughout the day just like ordinary stocks. So I know a lot of you guys trade, SPY, right? SPY is an ETF. Everyone trades that, right? Some well-known examples are SPY. Can you guys name any other ETFs? Triple Qs, right? Triple Qs. There's a lot. There's a lot of different ones, right? So SPY is basically the oldest surviving and most widely known ETF. It tracks the S&P 500 index, okay? It tracks SPX, right? SPX is the index, okay? You can trade SPY or you can trade SPX. It doesn't matter. iShares Russell 2000, IWM, tracks the Russell 2000 small cap. Triple Qs index, the NASDAQ 100, which typically contains technology stocks. So if you want to, triple Q is basically, it's weighted with a lot of all the tech stocks, okay? Then there's DIA, represents the 30 stocks of the Dow Jones Industrial Average. So there is oil, OIH, energy, XLE, financial services, XLF, real estate, IYR, biotech, BBH, and then commodities like crude oil, USO, natural gas, UNG, okay? What is an index fund? An index fund is a mutual fund or ETF that is designed to track a specific index of stocks, bonds, or another type of investment. For example, an S&P 500 index fund would invest in all 500 components of that market index in order to replicate its performance. But then again, when these things move, it's usually just based on like 5 stocks, right? The biggest names, okay? That's what matters at the end of the day. If Facebook, Amazon, Apple, Google, were all to fall, but EA, Walmart, and Home Depot are both going up, you think the market's gonna go up or go down, right? It's gonna go down. So I'm gonna go over some of the different sectors, actually all 11 of them. Financials. The financial sector consists of banks, investment funds, insurance companies, and real estate firms, among others. In general, the majority of the revenue generated by this sector comes from mortgages and loans that gain value as interest rates rise, right? So when they raise interest rates, these are good names to get into, right? So that's like a tool that you can have in your arsenal. If you understand the different sectors, then you can see, like, if different news come out, oh, this and this and this and this, oh man, that's gonna affect the financial sector. So maybe I should go swing some calls, right? There's AIG, GS, Goldman Sachs, right? JPM, JP Morgan. Can you guys name any other financial stocks that you can think of on the top of your head? Hector said BAC, Bank of America. Taylor said C, Citibank. Right? It's a lot. There's a lot of them, okay? 2, utilities. The utility sector consists of electric, gas, and water companies, as well as integrated providers. In general, the sector generates consistent recurring income by charging consumers and businesses that provide higher than average dividend yields. Okay? Consumer discretionary. That's the third one. The consumer discretionary sector consists of retailers, media companies, consumer service providers, apparel companies, and consumer durables. In general, these companies benefit from an improving economy when consumer spending accelerates. Can you guys name some stocks that fall under consumer discretionary? Okay, Apple, Shop, Nick, Mo said Louis Vuitton, Target, Home Depot, Walmart. Okay, those are perfect. Consumer staples. The consumer staples sector consists of food and beverage companies, as well as companies that create products consumers are unwilling to cut from their budgets. So what does that basically mean? What is one word for that? It consists of food and beverage companies, as well as companies that create products consumers are unwilling to cut from their budgets. Exactly. Nick and Jacob are right. Necessities. It's necessities, okay? In general, these companies are defensive plays capable of withstanding an economic downturn. Okay, what does that mean, right? What does it mean when a stock is capable of withstanding an economic downturn? What does that mean? What is it good for, right? What is it good for? If you're an investor, why is it good? Right? Why? Exactly, right? So long-term wise, it's good to invest in these kinds of stocks because no one's going to stop buying them, right? No one's going to stop buying food, all right? No one's going to stop buying water, right? Essentially, I don't want to say it's recession proof, but you know, according to facts, right, they're considered defensive plays. Okay, so you know what I mean. That's why like things like Coca-Cola, they're all good, like in terms of like receiving dividends, stuff like that. Yeah, Nick is right. When the market goes down 30%, they only fall like 10%, so they don't fall as much, right? Because people are still buying. People like if the world was no, I don't want to say that, but let's say like something bad happens, right? And people stop buying, products from other companies, but they're still gonna go to Costco, right? People are still gonna go to Costco and buy food, right? So number 5, energy. And the energy sector consists of oil and gas exploration and production companies, as well as integrated power firms, refineries, and other operations. In general, these companies generate revenue that's tied to the price of crude oil, natural gas, and other commodities. Right. Let's go to number 6, healthcare. This is my favorite one. Healthcare. The healthcare sector consists of biotechnology companies, okay? Hospital management firms, medical device manufacturers, and many others. In general, this sector is considered to be both a growth opportunity and defensive play, since people will always require medical aid. Do you guys know anything about sector rotations? Right, there's this thing called sector rotations where, depending on the market cycle, certain sectors will start booming, like certain sectors will start doing better than others. So it's like, let's say, there's 10 different okay, let me put it this way. So for 2 months, we can see the financials sector go crazy or the tech sector go crazy, right? And then 3 months later, right? 3 months later, you know, healthcare starts popping, right? So there's different rotations that you can kind of catch, right? I kind of believe that we're in like we're going into healthcare, like we're gonna start jumping into healthcare in terms of like, I feel like healthcare is gonna go up even higher now. Not because of the virus or anything like that, but because healthcare hasn't really seen a good, like if I go on the weekly, it hasn't really been doing much. Okay, other than if you look at tech, like look at this, it's already been going like crazy, right? So what else is Biogen is crazy, right? Industrials. The industrial industry sector consists of aerospace, defense, machinery, construction, fabrication, and manufacturing companies. In general, the industry's growth is driven by demand for building, construction, and manufactured products like agricultural equipment, right? LMT, Honeywell, and Caterpillar, right? So LMT or like NOC, right? Northrop, whatever that thing is called, the defense stock. Caterpillar, you guys know Cat, right? You guys know those bulldozers? It's that's what they make, right? We're always gonna need that, right? Unless there's something crazy happens and they come out with robots. Someone asked, how do you check what area money's flowing to? You can look this up on Google, bro. Like there's everything you can look up. Like there's nothing you cannot look up on the internet. All right, there's like, for example, if you go on like Finviz, right, bar chart. There's a lot of different websites you guys can look at to look at these things. Literally everything is in front of you. Like everything is there for you to look for. Like if you want to look for something, you're gonna find it. You just have to try, right? I didn't know, the reason why I know all these things because I do my research, right? I don't just talk out of my ass, right? Let me show you guys bar chart, for example. Right, bar chart. You can look at the percent change in volatility. So if you go to bar chart, right? Sorry, if you go to bar chart, you go to options. You can look up, percent change in volatility. I usually look at the most active options to see like what everyone's kind of trading. Let me see. I don't know why my computer's so slow right now. I think it's because I have this on and it's recording. So look. All right, guess what the number one is? If you guys didn't see it, what is the number one traded option right now? Tesla, then Apple, Twitter, Microsoft, BA. So tomorrow, honestly, you can do this, right? You can just do this. If you guys want to, make it easier for yourself when you guys want to look for things, just go on this fucking website and look at the most active options and just look through the top 20, right? And just stick with that. Stick with that for the week. And just, do your research on them, whatever, right? Some people, get so confused, like, on what to look for. They're like, what should I look for? It's right here, right in front of you, right? Percent of put options. Look, the Tesla, according to this website, right, the percent put ratio to call ratio is, the call percentage is 37% and the put is 63%. So who's heavier on what side, right? So right now, a lot of people are looking at puts for Tesla, right? It's heavier. It's heavy on the put side, right? But I don't know if you guys know this, right? Understand that Tesla has been the most shorted stock the past 2 years, even before it ran from 400 to 900. I don't know if you guys know this, but they were the most shortest stock on Wall Street. That's why they didn't really fucking move much, like all the time. That's why if you look at Tesla, let me show you guys why like how what I said is true. Forget this one. Wow, why does the chart look like this? The whole up move just ruined it. All right, forget this, right? Forget this crazy run, right? So look at this. Look at this. What is this? Right? What is this right here? This is a yearly chart from last year. I remember trying to trade Tesla last year, always fucking losing money because it couldn't decide what to do. Like, look, this is a daily chart. All right, this is a daily chart. Now look at this. Look at this candle. Just look at this candle itself. Like, people don't understand. People think it's just like I hate when people think like every day you can make money in the stock market. It's not as easy as people think, right? Especially when you get these types of movements. So imagine you're trying to trade it on this day. So what happened in this day? What happened in this day right here? Okay, opened up here. It opened up here. It went down. It went down. It went down from 328 all the way down to 322, and then it went all the way back up to 338. Right? This is all in one day. Remember this, okay? So it opened up at about 328, went down to 322, went up to 338, and then went back down to 330, right? So that probably, all these different days faked a lot of fucking people out, right? Faked a lot of people out. So Tesla's, back then it was just like this. Like, it was crazy. It was crazy, sideways, choppy, because it's the most heavily shorted stock, right? It should have been like this, honestly. It should have been like this last year. It should have. I don't know why, right? So understand, sometimes, like, not you're not gonna get good movements every single day, guys. Like, it's not possible. So just be aware, right? Be aware of things that be aware of sideways action. Okay, look, what is this? It's a little flag. Okay, so Tesla, that's a 4-hour chart. All right, let me go to some little technical. This is hard support, right? If you guys see this, look. If you guys see on the 4-hour chart, okay, you guys see on the 4-hour chart, and you guys see a lot of touches of support after a dip, right? That's a crucial area, okay? This line right here. So what I do is I just change the color, right? So I know, right? So I know. I can also make this line right here if I really want to. This where the wick starts to go down, right? Because this is 687 and this is 702, so that's a $20 drop. Just this little, just this little thing right here, just this little right there. That's a $20 drop. That's crazy, right? See how tight it looks, but how far away it is in terms of price. That's crazy. Even here, if you guys look at this, if you guys pay attention to what I'm doing, even look at this line I'm about to make, right? So this line is from pre-market yesterday. It formed the support over here. Oh my gosh. It formed the support over here, right here. Right? So look, you see how tight it looks tight when you're looking at it, right? But if you look at the price comparison, this red line is 702, the middle line is 695, and the bottom line is 687. So they're all literally still $6-7 apart, even though it looks really tight. Okay. You can go back to here. When you guys want to go, for example, you can look up different sectors here. Look it down here. It says optionable stocks by sector. Okay. If you're really bullish on the health sector, you don't have to just buy UNH, right? You don't have to just buy CVS. There's a lot of different names out there. So look, let's go to consumer discretionary. Right? You see all these names? You see all these names for us? AAP. I bet you none of you traded AAP before. I haven't. I've never traded it before. ABG, ACN, ADS, AEE, AEP, AES. Right? There's a lot of fucking different names. And look at and if you want to see if they're tradable or not, right? You look at their volume, okay? Like this one right here. Let me find one that's bad. Okay, AMWD volume 48,000. Nope, I'm not touching that. Right. Best Buy 2 million volume. Baba, you see how Baba's 10 million volume. So as long as their volume is in the millions, right, it's tradable. Like Costco, you can make a lot of money on Costco. You know, there's a lot of these different. Remember, keep this website on your tab. It's called barchart.com. Okay. Now, don't think that just because you have this website, it's going to tell you what to buy. No, it's just telling you. To me, it's just giving me information and giving me ideas of what I should look at. Okay, you know, like for example, tomorrow, if I want to trade something, I'm gonna go to unusual options activity. All right, this is from today. Let it load. So this one, tomorrow. I might be looking at Twitter, Love, Boeing. You know, look. There's a lot of unusual options activity for Twitter just today. Twitter, right? You can look at the expiration dates here. So you can see that, you know, a lot of these people are, you know, assuming that Twitter is going to go up by the 14th. Okay. If you want to look at, oh, here you go. Like this. Let me see. All right. So do any of you guys make your own watch list? You know how I make my watch list every morning? Do you guys make your own watch list? This is important. All right, listen to this. Okay. When do you guys make it? When do you make it? Do you make it the day before? Like, do you make it tonight for tomorrow? Or what? How do you guys make it? Okay, good. Pre-market. Pre-market is when you make it. Me, I make it at like 3 a.m. in the morning, right? Because I try to figure out like, you know, what's happening. I make it like right before the market opens or like, you know, a couple hours before. I don't make it the night before. There's literally no point in wasting my time looking at just making a watch list the night before because anything can happen. Anything can happen from the time you go to sleep to the time you wake up. So if you make a watch list for Facebook, you say, oh, break above 202, and then I'm gonna go buy calls. And then next thing you know, you wake up in the morning and that thing is at 205 and it's like 2 minutes till market opens. Where's your next entry point now? Right? When is your next entry point now? So it's important to make it before market opens. You know what I mean? Like maybe an hour before. And when you guys make your watch list, make sure you have room. Okay? Like for example, for tomorrow on let me see, you know, Tesla's not a good example. On Facebook, okay? On Facebook, if I want to go buy calls for tomorrow, I'm going to, like for example, this line right here, once it breaks, I'm going to buy calls, right? But if it breaks before pre-market, like if it breaks before the market opens, and then let's say Facebook ends up like over here, pre-market-ish. No. Let's say Facebook ends up over here, pre-market, right? Let's say this is Facebook pre-market. Right? Oh, it looks like an actual fucking candle. That's crazy. Look. So let's say it does this. Right? Where is your next entry point? This one or this one? The green one, right? Right there. 213.2. Okay? Make sure Like for like some people when they make watch lists, it's like they'll make a watch list, right? And then the entry price will be at like, okay, no, this is hilarious. So some people will make their watch list, before the market or like the day before, and then they'll put like, oh, break above this level, right? Let's say break above this level for calls, and then pre-market, right? It ends up over here, and then it opens, and then when the market opens, right? Facebook goes all the way up here, and then all the way up here, and then they'll be like, oh, I called this out, like break above 211 for calls, right? But who the fuck is gonna want to buy Facebook? Who the fuck is gonna want to buy Facebook $2 over the entry price? And knowing that Facebook only moves like $3 a day, right? I hate when that happens. I hate when people do that. Like, oh, break above 211 for calls, and he says it like at 9 at night, and then next thing you know, in the morning, Facebook opens at 213, right? It goes up like 50 cents, and then he's like, oh, called it, told you so. What do you mean you called it? That thing went up pre-market while you were sleeping. No one was able to get into that. You didn't call anything, right? So understand that when you guys make your watch list, make sure it has room. It has room for it to move. Like if okay, this is another example. All right, I'm gonna show you guys. So if this is important, actually, let me see. Okay, so if Facebook, right? If Facebook opens up, so if this is your first level for calls, this one right here, the 211, and then your next one would be 213, right? But let's say Facebook does this. Okay, let's say Facebook does this pre-market. Give me 1 second. Right, let's say it does this pre-market. Oh my gosh. Whatever. Let's say it does this pre-market. Now, are you still gonna enter like your call, your call level? Like for example, here, right? It opens up here. It's close. It's getting closer to your third resistance. Your third one. Would you still get into Facebook at 216 after it has already went up from 211 pre-market? And there's no news, nothing. Right? So what should you do when this happens, right? But a lot of people don't understand because they'll see Facebook like literally, guys, at open the first 2 minutes, Facebook will be like this, and everybody was already gone in, right there. And then what happens? Boom. Everyone, all you guys are fucked. You know what I mean? So wait. All right, you gotta wait. So the best thing to do is in this case, if it already went up a certain amount, so you guys have to understand the range that these stocks move, right? Facebook has like a range of $3-4. Tesla has a range of like now it has a range of like $70 a day, right? Amazon, $20, Google, $14-15. The reason I know this is because I'm used to like seeing the fluctuations, right? EA, for example, moves like $2. Okay, Walmart, $2, right? So if it's already gone up, if Walmart has a range of $2 and it's already gone up $3 pre-market, do you want to fucking buy that? No. Okay, no. You want to wait for it to pull back. Okay, always want to wait for it to pull back. Okay, now that I got that one over with. So someone asked, what triggers the downward movement? Is that because folks are selling it? If someone is selling, that means someone is buying too, right? Okay. Can someone answer this question? Okay, I'll answer it, but someone else answer this. What triggers the downward movement? Is it because people are selling it? Right? This means that there's more sellers than buyers, all right? Supply and demand, right? There's more, the supply exceeds the demand, right? If supply exceeds the demand, where is the price going to go? Down, okay? When there's more demand than supply, price goes up, right? So don't overcomplicate how the stock market moves. It's literally just so, it's so simple how it moves, guys. It's so simple. It's just buyers, sellers, buyers, sellers, buyers, sellers, fear and greed, fear and greed, fear and greed, supply and demand, supply and demand, supply and demand, supply and demand. That's all price action is too, right? And somebody else asked, how do we know the supply and demand of the stock? Is that like float or volume? How do you know the supply and demand, guys? How do you figure out the supply and demand? You don't need to get technical with this. You look at the candle, all right? You look at the price action and you see, you literally see it. When the price goes up like crazy, people are, you know, they're going on a FOMO run, right? People are buying it up, right? There's a lot of demand for that now. Volume increases, demand, right? Guys, don't overcomplicate trading, please. You're only you're gonna mess yourself up. Volume leaders. You can go on bar chart, look at volume leaders. All right. Look at this volume right here. I wouldn't trade this though. PBR, $14. Look at the volume on this, 104 million. Okay, look guys, you don't have to trade Tesla and Facebook every day either. All right, you don't. There's a lot of different names out there. Look at this. Look at Zynga, a $6 stock. Look how much volume it has, 72 million. NEO, $4, 75 million. Twitter, $38, 87 million. Nokia, 90 million. Snapchat, 40 million. Snapchat has more volume than Tesla does. Uber has more volume than Tesla does. Intelsat has more volume than Tesla does, right? General Electric. All these stocks move every day. So don't just focus on Tesla all the time, all right? Don't focus on Tesla all the time. Let me show you a couple more things, right? Before we go back to the slides. Stock market sectors right here. If you go to sectors, you can look at the industry rankings, right? Look at this. Solar, business information, utilities. So these are the rankings, right? These are the rankings, all right? Let's see what else can help you guys. If you guys are one of those people that like trade penny stocks, go right here. Garbage. Look at this, a 0.0020. Is that, what is that, 20 cents? Or is that like a quarter of a cent? I don't even fucking know. 0.2 of a cent. Yeah, that's crazy. Market momentum. So look, guys, you have all these different tools that you can use. Okay, don't rely on this, right? Sometimes you don't want to trust what you see on the internet, but this is like a website that just shows you, statistics, like numbers, right? It's not telling you, hey, Apple's gonna go up, right? It's just telling you the numbers, like volume, like shit like that, right? So make sure you guys have this website down before I close it. Somebody asked, how many stocks should I have on my watch list every morning? All right, I don't want to answer this question, but I want you guys, the rest of you guys, to answer this question for him, just so he can have an idea of what you guys are doing too. And then I'll tell you guys how much I have. All right. Wow, that's crazy. Everyone, everyone is on the same page. That's insane. Everyone said 3 to 5. Okay. So me personally, I usually have 3 to 5, maybe 6, 7, 8. Depends, right? Because me, I can look at this many stocks, right? It looks weird right now because I have this screen. What's it called? I have this screen. Oh my gosh. I have the screen tightened because my screen goes wider than this. But if I make it wide, then whatever you guys see on my screen is gonna be small. But I can look at like, you know 18 different names. No, 16. 16, sorry. 16. But it's not good to look at that many names, all right? It's not, because then you get kind of you get thrown off by things. Like if you're paying attention to like, 16 different names instead of paying attention to four, you might miss something in those four. Okay? Gap up and gap down. This is good too. You look at the gap ups and gap downs. Okay, gap ups, gap downs. All right, so you guys know now. You guys understand how this website works, right? I'm gonna close it. Bar chart. You guys can also look at Vinvis. This is like a screener. It's like bar chart, but it's more of a screener. All right. You can look at the percent change, the top gainers, unusual volume, upgrades, new high, new low. You can use this to kind of figure out what you're gonna trade tomorrow. Like if you're too lazy, to make your own patterns on the chart, you can go here. Right? It'll show you. They put it as signal, but I wouldn't fucking use this as a signal. Like I'm not gonna trust this website to you. I'm gonna use my own analysis, but they show you different patterns that are forming on these names: trendline support, trendline resistance, wedge up, wedge down, triangle ascending, triangle descending. Right? So just remember, these are good. This is a good website to look at things. Right? Latest insider trading. There's news here too that you can see. Hawaii, how do you say Huawei sues Verizon over patents, right? So look, guys, they have everything here. They have a lot of things. I can look up. Let me see. I'll look up Tesla, right? It'll show me everything on Tesla. It'll show me everything on Tesla. Look at this. Market cap, institutional owned. 58% of Tesla is owned by institutions. Sorry. Okay. Look at this news. Look at all this news. It's from today, right? Guys, when you're on your free time, go to this website. Just it's knowledge for you, right? It's only helping you out. You're getting more of an understanding of what's happening, how to look at things, what to look for, shit like that. Okay. So technology. Let's go back to sectors. Okay, technology consists of electronic manufacturers, software developers, and information technology firms. In general, these businesses are driven by upgrade cycles and the general health of the economy. Although growth has been robust over the years. 9, telecom. The telecom sector consists of wireless providers, cable companies, internet service providers, and satellite companies, among others. In general, these companies generate recurring revenue from consumers, but some subsets of the industry are facing rapid change. Okay, 10, materials, 11, real estate. Here is a sector by sector performance, yearly performance. Which one of these did the best? Healthcare and infotech. Healthcare and infotech. All right. What is futures market? What is a futures market? Futures market is an auction in which participants buy and sell commodity and futures contracts for delivery on a specified future date. Examples of future markets are the New York Mercantile Exchange, the Kansas City Board of Trade, Chicago Mercantile Exchange, the Chicago Board of Options Exchange, and Minneapolis Grain Exchange. You don't even you don't need to know that. Futures markets are more than simple agricultural contracts. It involves the buying, selling, and hedging of financial products and future values of interest rates. So people trade in the futures market all the time. A lot of old people trade futures. Okay? A lot of professionals trade futures. And a lot of them make a lot of money too. So all you need to know about futures when you're trading stocks, right, is just to look at like ES, when you're trading. So just don't overcomplicate. Don't overcomplicate it, right? Don't try to be a master of futures when you don't even know how to trade stocks yet, right? You know, don't don't try to understand fully. Okay, futures, it kind of crosses with stocks, right? But you don't need to know everything about futures. You don't need to know everything about forex to understand stocks, right? It's good to understand the correlation between the two or the three, right? But we're focused on stocks. You're here for stocks, not futures, right? Trading styles in depth. An important factor to take into consideration while you're day trading is to understand market conditions. Okay. Don't expect market to be perfect every day. Don't expect your strategy to work 100% every day. Always know when you're going to get in and when you're going to get out. Now, honestly, do you guys have a plan every day? Do you follow a plan every single day? Be honest. A plan meaning you know when you're going to get in, you know when you're going to get out, and you don't get I was going to say demoralized. You don't get, you don't get, you know, distracted, or you don't let your emotions take in when your trade turns into a losing trade. You don't let your emotions come in when you're up a certain amount. Some people will be so fucking euphoric, right? They'll they'll end up jumping up and down on their bed. They see they're up like, whatever amount, but they don't even take profits, right? So understand, this is like the most important part of trading, like understanding how your thought process is, right? Understanding how you work in certain situations, right? How you're able to assess what's going on, and then how you're able to execute, right? All it's about is execution, right? You can't be. Some people, like I know this for a fact. So, they see something good, but they hesitate. Why do they hesitate? They hesitate because of fear, no plan. Most of all, they're scared. They don't want to lose money. They don't have the confidence to do it. So if you don't have the confidence to do it, right? What should you do? What should you do to make sure you can get some confidence back? Boom. Taylor said, size down. You size down. Okay. If you have a $50,000 account and you've lost 30K in a week, right? And then now you have 20,000 left. Are you going to be going in for $4,000 contracts, right? No, right? You're probably going to be, your confidence is going to be shot the fuck down, right? So now you're like, oh, what should I do now? Like, I don't know if I have the confidence again. Well, all you got to do is size down. Buy one contract for like $100. Okay, do that for like a week. Get your confidence back. Get your system going again. Right, build that momentum. Once you build that momentum, right, even though you've only you make like $100, 200, 300 per trade instead, it's gonna build up. During the time you're trying to get that confidence back, it's gonna build up. Okay, then once you have that confidence again, then you can slowly size up. Right, the reason why people get scared or hesitate is because they want to, like, you guys, like, everybody want, like, people want to make so much money in one trade that they don't consider the risk that they're putting on. Right, all they're focusing on and looking forward to is the return. People will have a $5,000 account and then they'll trade Tesla. Tesla contracts are like 3,000 for one, first of all. And then Tesla goes ballistics. They make 5K off of the trade. What happens the next day? They do it again. They do the same shit because they saw that it worked. Right? And now they lose 3K or 4, 5, 6 now. So they don't. What people do is they don't fucking use risk management. That's the only thing. Risk management is what people don't use. They just use too much. They use too much because they want to make more. That's the only reason. Especially when you go on like social media, guys. Like, it's so, like, I'm trying to stay away from Instagram. Not stay away from Instagram, but like, not like it'll have an effect on you because you see people make a lot of fucking money, and then trust me, it has an effect on you. Like, it's gonna affect you mentally, right? It's gonna affect you mentally, and it's not necessarily like you can be happy for someone because they're making a lot of fucking money, right? But when you, like, what people do is they'll start comparing themselves with other people, right? When you start comparing yourself, you start, you're just like, oh fuck, that person's making 20K a trade, 10K a trade. I'm only making $200, or I've been losing money and he's been making money. Like, what? Why is this happening, right? So make sure you guys just focus on yourself. Okay, focus. Remember, focus on yourself, like your trading. That's it. Nothing else, right? You can be happy for other people, but don't be affected by what they make versus what you make. Because, like I said, probably said this yesterday. Everybody's on different chapters of their book. Okay, you might be on chapter 3, someone else is on chapter 60. Right? You can't jump chapters. So focus on your own growth and progress. Let's go over scalping, trading styles in depth. So someone asked me, first of all, can you go over risk management with options? I'm gonna remember we follow a syllabus, right? We go over different things. We're basically going over fundamentals still, right? When am I gonna go over risk management? When I talk about strategy. Okay, I don't want to repeat myself later on. Talk about risk management now and then talk about it again later on. So just be patient. Trading styles in depth, right? Scalping. Only scalp liquid stocks. What does this mean? You guys know what this means? When you have to only scalp liquid stocks, right? You need the volume to be able to get in and out. What if, what if you get 50 contracts of like, what if you were to buy 50 contracts of EA or WWE? You think you're gonna get filled for 50 contracts? No, you're not. It's gonna be hard. And even if you do, good luck selling it. Good luck selling it if you do, right? Especially if you make a good amount. Good luck finding buyers, right? Good luck finding someone who's gonna want to buy 50 contracts from you, and and the contracts are up like $4. Let's say you're up like $100,000. You're not going to buy that shit. All right. Having effective risk management. All right, you know what? I'll go over some risk management. It's simple. Risk management is simple. You have $1,000. You have a cash account. Are you gonna put in $500 in a trade if you have $1,000? No. That's it. That's what risk management is. You're managing your risk. $1,000, use 100, use 150. Boom. That's it. That's what managing risk is. Right? You're managing your risk. You're managing what you want to risk. Okay. If you have $1,000 account, you have a cash account, you can do 10 different trades with $100 each for the day. 10. If one trade doesn't work out and you're down $10, cut it. If another trade doesn't work out and you're down $20, cut it. If one trade works out and you're up $30, $40, $50 off of $100, take profit. Right? It's that simple. The reason why people lose money is all because no one has the right state of mind when they're trading, right? Everyone is just, it's human nature to want more. That's it. That's what it is. It's human nature to always want more. Always want more. Right? Have an effective risk management system. Be quick to settle for a loss if you need to. Use Thinkorswim or TradingView charts, not Robinhood. This is key. You know how many people I run into that say they trade, but they don't even know how to look. They don't even have Thinkorswim or TradingView. They don't even look at a chart. They look at a Robinhood chart. You guys know what a Robinhood chart looks like? They don't even look at a chart. They look at this. They look at this. Oh, market's going up. Oh, there's support right here. Oh my gosh, there's resistance right here. Bro. You know what I mean? So make sure you guys, it's important, right? You don't have to spend like 14 hours a day on charts. You don't. You just have to find what you're looking for. That's it. To be good at scalping, you need to have a good presence of mind and approach trading like a machine. Then there's day traders. Always wait for patterns to form. All right, let me show you guys examples. And then always wait for volume to show. Like today, I signaled Google in the group, right? Got over fucking 130% on that, which is nice. One contract got me like 1,300. Should have bought more, but hey, can't complain. Oh, it's not loading. Anyways, let me look this up. Right here. It's a good one.
About Julia.
Oh no, hold on. This one. Okay. For example, this one. Sorry, my chart's not pulling up anything. So, oh, there it is. Thursday. That's today. Okay. Google. Look at one. Thursday. Okay. I'm trying to just chart this real quick. All right, cool. So Google. Google. All right, Google. I'm gonna look at the 5 minute and the 1 minute. So looking at the 5 minute or the 1 minute, right? Let's go to the first 6:30. What happened here, right? Went up, went down. So when you guys make your support resistances, right, I'm gonna go over this more next week. You can use the pre-market low as support. Pre-market low here. Well, oh, I was already here. I already got it. So it was here. It was around here. Make this line too if you want instead of this. So what does this wick mean? All right, I'm not gonna go over too much, but this long wick means that there's buying pressure, right? People buying. So that should tell you right off the bat, right at the open, people will buy. Okay. Now here, it pumped up. It pumped from $14.50 to $14.54, $4, then sold off. But once it sold off, it created that support there. So, it's nothing to be scared of. Okay, form that support. So before this two candle even forms, you can make the support here because you see this first candle, right? You can use that. So, do you guys see a pattern that also formed on the first 5 minutes? No, you guys don't see it. All right, look right here. Right, price action. Boom. Triangle. Should immediately tell you, oh shit, this might break out. Guess what? It broke out, right? Broke out. There's a lot of volume here, so broke out. Right, broke out, rode up. This is a good candle too to look for. Like this, the volume kind of increased compared to the others, right? So this one too, right here. Look at this big ass volume bar right here. Right there. Now 1 minute candle. And then went into a range. This is like the perfect setup here for like scalping, right? Scalping wise, okay? You find an uptrend, just like the post I made on Instagram today. You find an uptrend, okay? You find an uptrend, and then you find a range, okay? This is good for scalping because if you get in size, you can make a lot of money. So uptrend, range, breakout. Okay. If you scalp, all you need is like a minute or two. Okay. When I scalp, I don't hold it for like 4 minutes. I immediately cut it, like almost immediately. This is another perfect range too. Uptrend, range, breakout. Okay. Let me show you one more example of a breakout. I don't think there's a lot today. There isn't a lot of things going on today. It was just all right. It's not loading, but you guys understand, right? We'll go over more of it next week on technical analysis. just to show you. Use 1 minute frame in the first 30 minutes of market open. Then you switch to the 5 minute chart. You don't just go to the 5 minute chart when the market's just open. You can't see shit. Okay? You wouldn't have seen that triangle on the 5 minute chart. Saw it on the 1 minute chart. Okay? Remember that. Swing trading. How to swing profitably. Okay? This is the last slide before we end it. How to swing profitably. Patience, patience, patience. Patience. Okay? How many of you guys, if you guys are in the group, right? If you guys are in my group, I'll post a swing signal. And then, okay, I'll post a swing signal. And then 3 hours later, somebody's like, should I still hold the swing? How does that make sense? Right? How does it make sense? If I'm over here saying, buy a contract that expires in 2 months, and the first 3 hours you're already complaining that you're holding it, what? Yeah, you know what I mean? Like, it doesn't make sense. Like swinging. You guys know what swinging is, right? Swinging is when you hold it for a week, 3 days, 2 days, 4 days, right? More than a day. Because you're anticipating a big move. That's the reason why you swing. Why should, if you're gonna just hold it for the day, then don't buy an expiration date that's a month, 2 months away. You're just wasting your money, right? You could have just bought this week's expiration. Okay. Swing trading can be very profitable, right? It's very profitable. Could be. It's the complete opposite of scalping or day trading. Sometimes you're gonna have to hold through a down day only for the stock to soar the next day. I'm pretty sure this happens to a lot of people, right? This happens a lot to me. Sometimes I get into a swing, the next day I'm down, like, I'm down money, but the next week it just goes up like $20. Like, really, right? So the reason why, you give yourself time for a reason to see if it will move up the way you want it to. You're giving yourself more time and more room for the stock to move in your direction. As long as your analysis is right, you're gonna profit. Okay. I want you guys to watch this video that I posted on swing trading. I'm gonna link it here. Watch that. How to find accurate swing trades. Someone said, what happens when you get down to $0 during a trade? Does that mean you're out of a trade? Or still in the trade of the stock? You're still in the trade until it expires. Rahul, I'm gonna stop recording this.